Looking for some fantastic long-term investment ideas? Like the idea of collecting safe, growing, totally passive dividend income while your wealth exponentially increases? Want to know my top 5 stocks for July 2021? Then you have to check out today's video.
He is a best-selling author.
30-year-old Jason Fieber has a plan.
This guy retired at only 33 years old.
I don't know if I know too many people that have accomplished something like that.
He's really kind of a guru when it comes to passive income.
Before I get into today's content, please give us a big thumbs up if you find value in our videos. Helps us to get the word out and grow the channel, and I'd really appreciate it. High quality dividend growth stocks are like golden geese, and the growing dividends these stocks pay out are like ever more golden eggs. If you can build a dividend growth stock portfolio that's large enough, you can live purely off of the growing dividend income it produces. Don't slaughter the golden geese, live only off of the golden eggs. Simply put, high quality dividend growth stocks are some of the best stocks in the whole world. That's because it takes a world-class enterprise in order to be able to fund growing dividends for decades on end. However, the market has been on a tear, and a lot of high-quality dividend growth stocks out there look expensive and no longer appear to be buyable. That said, there are still some undervalued gems out there. Today, I want to give you my top 5 dividend growth stocks to buy for July 2021. Ready? Let's dig in. My first dividend growth stock pick for July 2021 is Bristol-Myers Squibb Co, stock ticker BMY. Bristol-Myers Squibb is a global biopharmaceutical company. With a market cap of $149 billion, this is a major pharma business. They've got one of the top drugs in the world with Revlimid. Growth has been pretty solid here. Revenue has grown at a compound annual growth rate of 8% over the last decade, while earnings per share has a compound annual growth rate of almost 13% over the last 10 years. You know what else is growing? The dividend. Bristol-Myers Squibb has increased its dividend for 12 consecutive years, with their most recent dividend increase coming in at almost 9%, and the dividend is protected by a low payout ratio of 26.3% based on midpoint fiscal year 2021 non-GAAP earnings per share guidance, plus the stock yields a market-beating 2.9%. Meanwhile, the stock's valuation is very reasonable. The forward price to earnings ratio is below 10 based on the aforementioned guidance. The price to cash flow ratio at 10.9 is about half that of its 5-year average of 21.1. Our recent full analysis and valuation showed the stock's estimated intrinsic value at almost $70 per share. This looks like a great stock available for a great valuation. My second dividend growth stock pick for July 2021 is Enbridge Inc., stock ticker ENB. Enbridge is an energy, transportation, and distribution company. This is the largest energy infrastructure company in North America, a massive pipeline player with a market cap of $81 billion. Because it's in transportation, not production, it's largely insulated from volatile moves in energy prices. That creates a smoother upward growth trajectory. Revenue is compounded at an annual rate of 8.1% over the last decade, and distributable cash flow per share has grown at a compound annual rate of 8.3% since their acquisition of Spectra Energy closed in 2017. This is a big fat dividend that's also growing. You usually have to pick between a high yield and a high growth rate. Enbridge is the rare business that has typically given its investors both. The stock yields a market-smashing 6.8%. Even without much growth, that yield is awesome. However, Enbridge has increased its dividend for 25 consecutive years with a 10-year dividend growth rate of 11.3%. This is a high yield and high dividend growth stock. You'll rarely find this combination of yield and growth, and the payout ratio of 68.9% indicates no trouble with the dividend. Despite being up almost 30% this year, the stock still looks attractively valued. We put out a full analysis and valuation video on Enbridge not too long ago, concluding that shares could be worth almost $50 each. The stock is around $40 a share right now, so that's a lot of upside. Meantime, you're collecting that fat dividend while you wait for the upside to unfold. My third dividend growth stock pick for July 2021 is Huntington Bancshares Incorporated, stock ticker HBAN. Huntington is a regional bank holding company. This is a pretty small business compared to my other picks. The market cap is only around $21 billion, but that just means there's room to grow, and grown it has. They've compounded revenue at an annual rate of 7% over the last decade. Now, earnings per share has a compound annual growth rate of less than 2% over that same time frame, but that's only because of the pandemic and the loan loss reserves nicking fiscal year 2020's results. Profit is springing back big time this year. This surge in profits should lead to much higher dividends. The regional bank has increased its dividend for 10 consecutive years with a 5-year dividend growth rate of 20.1%. That's incredible, and I think there's much more to come. The payout ratio is only 52.6%, giving them plenty of dividend growth firepower. Meanwhile, the stock yields 4.2%. That yield beats out almost every other regional bank stock I know of. The stock is up 14% year to date, but the valuation remains compelling. The price-to-earnings ratio is 12.5. That's extremely low in this market. We put out a full analysis and valuation video on this regional bank only days ago, highlighting its appeal and low valuation. My valuation estimate came in at over $17 a share. The stock is a bit over $14 a share right now. That's a very advantageous gap between price and value. My fourth dividend growth stock pick for July 2021 is Lockheed Martin Corporation, stock ticker LMT. Lockheed Martin is the world's largest defense contractor. With a market cap of $106 billion, this is the 800-pound gorilla in the room. It's the prime defense contractor. That majestic position has led to big growth. Revenue has compounded at almost 4% a year over the last decade. Earnings per share sports a compound annual growth rate of 13.4% over the last 10 years. The impressive bottom line growth has fueled impressive dividend growth. Lockheed Martin has increased its dividend for 18 consecutive years. The 10-year dividend growth rate is 14%, pretty much right in line with earnings per share growth. And with a payout ratio of 42%, there's plenty more room for future dividend raises. Plus, the stock yields a market-beating 2.7%. Surprisingly, this stock looks downright cheap. Price is what you pay, but value is what you get. This stock's price of $381 a share looks cheap to me when you compare that to the estimated fair value of $500 a share. Our analysis and valuation video, which we put out a couple months ago, shows how we arrived at that figure. This stock could move up in a hurry. My fifth dividend growth stock pick for July 2021 is Pinnacle West Capital Corporation, stock ticker PNW. Pinnacle West is a utility holding company. Despite the corporate name that might imply otherwise, this is actually an electricity utility business operating in Arizona. One of their major service territories lies within the Phoenix metro area, one of the fastest growing areas of the United States. The company sports pretty typical utility growth over the last decade. Revenue is compounded at about 1% annually and earnings per share at just over 5% annually. But based on recent population growth trends in Arizona, this company's future is about as bright as the sun in Phoenix. That should translate to more dividend increases. Already, they've increased their dividend for 9 consecutive years. The 5-year dividend growth rate is 5.7%, which is plenty when you consider that the stock also yields 4%. And with a pretty pedestrian payout ratio of 67.5%, the dividend is easily covered. This stock hasn't moved up much this year, creating an even more attractive valuation relative to the market. I thought this stock looked good at the start of 2021, but with some mild underperformance year to date, it looks even better now. Almost every basic valuation metric, including the price-to-earnings ratio of 16.8, indicates undervaluation relative both to the stock itself and the market as a whole. Keep in mind, the stock's own 5-year average price-to-earnings ratio is 18.7, and this was a $100 stock before the pandemic. We'll have a full analysis and valuation video coming out soon on Pinnacle West. Suffice it to say, this is an attractive utility business operating in an attractive area, trading for an attractive valuation. Thanks so much for watching. I hope you enjoyed today's video. Give us a like if you did, and let us know in the comments what you think about these top 5 dividend growth stocks for July 2021. Please make sure to subscribe to the channel and ring that notification bell so that you don't miss out on new content. Also, take a look at the description box below for some important links, including the link to my personal stock portfolio. This 6-figure portfolio, which I call the Fire Fund, generates enough passive dividend income for me to live off of. It allowed me to retire in my early 30s. I've made my portfolio entirely accessible over at Patreon, and I also post alerts there whenever I buy or sell a stock. I put my money where my mouth is, and I'm often invested in the same high-quality dividend growth stocks that I make videos on. Over the years, I've heard from thousands of investors who have been profiting from many of the same exact stocks that I own. So if you think this is something that you could benefit from as well, check the link in the description to see my portfolio and start getting my buy and sell alerts. I'll see you next time.